I just wanted to thank everybody for joining us for today's discussion conducted by HighRadius and Genpact over the PPP kit for receivables management. So just to give an overview of the presenters for today's session, first up we have Vikram Gollakota. Vikram has had more than 14 years of experience in consulting and implementation of AR solutions globally. In his career, he has worked for corporations in various industry verticals, including consumer goods, pharmaceutical, banking, agriculture, retail, and oil and gas, as well as manufacturing and food processing. He has deep knowledge in the credit-to-cash space and is currently responsible for the banking and payments channel at HighRadius. Next up, we have Sajeesh Kumar. Sajeesh leads the Invoice-to-Cash Global Enterprise Service line for Genpact, and his team is responsible for driving innovation, digital transformation to unlock business outcomes within the credit and receivables management space for clients globally. Sajeesh brings in 21 years experience in order-to-cash process gained by servicing various roles within the order-to-cash function as delivery operations lead, transformation lead, and solutions architect, and has a track record of working closely with multiple pan-industry global clients across all regions. He is currently based in the United Kingdom. Our moderator for today's session is Kim Erickson. Kim is the CEO and Senior Principal of Optimized Receivables, a women's-owned business. She's a sought-after change leader implementing HighRadius cloud solutions coupled with process design and AR transformation. Her expertise and passion are in the deduction management space, assisting manufacturers in realizing greater cash flow, efficiency, and effectiveness. Kim is an experienced AR professional with 12 of her 18-year acumen coming from Hormel Foods on various AR positions, most notably managing the centralized support service center where HighRadius CMS cloud solution was first implemented. So Kim, I will pass this off to you.
Thank you so much, Chandler. I'm so glad to be part of this panel, and I'm really glad to have the opportunity to be especially working with Vikram and Sajeesh. I believe that, one, I think they're really exceptional people with terrific knowledge, and so I think we're all really going to benefit from that today. And, one thing I thought might be interesting to know as we get started, when considering in some of the literature that came out about this PPP kit and this, around process, platform, and policy, is I noted that there is a sentence, a descriptor that was stating how it was a value engine for business. And so I thought, that engine name stood out to me for some particular reason. So I was thinking, engine, what do I think of? I think of power. I think of, generating something that's obviously a necessity in a piece of equipment, especially. And so then I thought, I'm going to go to Webster's Dictionary and check this out and see what Webster's Dictionary had to say about it. And it was really interesting because there was two statements that stood out to me. The first was, it was described as something used to effect a purpose, an agent or an instrument. And the second that stood out was something that produces a particular and usually desirable result. And I think that really sums up, what you're going to hear and how they're going to describe, these things coming together. And Genpact, HighRadius, it's quite a powerful combination. So with that, I'm going to kind of share my first question to the two of you. And again, thank you for letting me be part of this. I'm super excited to hear what you both have to say today. So I'm going to start with you, Sajeesh. So how would you, or maybe say, what would you say that the PPP kit is? Can you describe it for us?
Thank you, Kim. Pleasure to be talking to you and to Vikram today. And such a wonderful intro that you had in terms of, and two words that I took over. Purpose and desirable output, right? So to your question about what exactly is PPP, it's basically the ideal combination in a simplistic manner. It's the ideal combination of digital and domain coming together to drive a desirable and committed business outcome for enterprises through the receivables management function. Future of work is almost always been evolving. And the journey that we are going across today requires customized combination of digital and domain. There is no one silver bullet that comes across. Each industry is specific, each region is specific, especially when it comes across to receivables management. And the outcomes that you're chasing after is quite unique too. You're not talking about just being a much more efficient, cost-effective manner. You're also talking about cash, you're talking about revenue, you're talking about margins, you're talking about experience. The PPP kit is an initiative or a framework that actually looks at the ideal combination necessary for any enterprise to actually bring those three components in its ideal, specific manners to actually drive outcomes like cash, like cost, like experience. So that's basically what PPP kit is.
Awesome. So one of the things that you mentioned was just the whole component of the technology. And maybe I'll turn it over to you, Vikram. How do you see that fitting into this platform?
So Kim, so if you think about how technology has been a driver, if you go back to the 1980s, what I heard was 1980s businesses still thrived, right? Accounting still thrived. There was still a lot of accounting going on. Obviously, they were not, they were doing it on books and papers. They still had a process to get through their accounting every day, every month, every year, every quarter. But then as technology evolved over time from the 80s to the 2020s now, more and more process adoption had to happen. Technology is a never-ending evolution process, right? So it became a lot more important that people think about technology or a platform and process and policy enabling this platform to drive efficiency and effectiveness within organizations in a more streamlined manner is very key ingredient for them to achieve best-in-class status, right? So the way I think about it's like you need these three legs for your enterprise to stand on. You need to have a very strong process excellence going on. You need to have a very strong digital footprint, a platform, and then you need to have policies that mitigate risks and have the checks and balances. So the digital component is driving innovation. The process is making sure that it is streamlined, and policy to make sure there are checks and balances in the process. That's how I think about how the digital and domain that Sajeesh mentioned come together to give a business what is called as a committed business outcomes, which is what most businesses are looking for. They're looking to grow. They're looking to be more efficient, more effective. And the combination of these three, if you can drive a committed business outcomes, it's like no tomorrow for the CFO's office.
So you were sharing about, just that timeline, and I want to just do a quick follow-up to you, if you don't mind, first. Mm-hmm. And so as far as AI and machine learning, how do you see that having affected the AR space, let's just say over the past five-ish years?
That's a very interesting question, Kim, because 10 years ago, the movies that came out towards the consumers portrayed AI as this evil thing that's going to take over human life, right? And the last 5 years, things have completely changed. You are surrounded by smart, intelligent machines all around you, right? Your cell phone is more powerful than the supercomputer that was invented 10 years ago, right? You're surrounded by things like Apple's voice-enabled application. I don't want to give its name because all your phones will start ringing now. There's also this Amazon has this Alexa going on. There's Google has it. So there is, and even your cars are more smarter, right? So AI has really transformed how we live on a day-to-day basis as consumers. Now, on the business side, I still remember 6 years ago when we first launched AI-based cash application, I can see a lot of our competitors are like, are you kidding me? How can you let a machine or a machine decide what invoices to clear? And now they don't have a say if there is no AI. So AI is transforming people's lives in a very positive way, because you want your employees or your team members to be working on what really drives business, not really focusing on mundane tasks like applying invoices. They would rather have spent time on you, you spend time on building a relationship with your customer, resolving disputes, making the right credit decisions, right? Helping clients go through an electronic invoice presentment process. That is what companies want their employees to do. We're trying to level up your employees to the next level, adapting technology with the right process in place. Did that answer your question, Kim?
Yeah. The interesting thing to think about, in the, I don't say the early days, but the earlier days, let's just say, especially of HighRadius, I remember, having a team and there was a challenge. The whole adoption process was really a challenge. And I just compare that to today. You think of, like so many of the ideas and the updates and so forth are surfacing and bubbling up from teams that are using it, right? Which is like a big indicator, like, okay, they get this, they're looking for more. And hey, if it can do this, why can't it do this? And yeah, that's really awesome to see. Okay, so now I'm gonna switch and talk a little bit about, or ask Sajeesh more about the clients, and are you seeing the value of this process policy or process platform policy, coming together, the PPP coming together seamlessly, and can you share some examples of that?
Absolutely, Kim. So is this showing value? Definitely. But before I jump into what sort of value it is driving for enterprises, it's important to understand the evolution of what enterprises are looking at from a receivables function predominantly, right? The days of collecting cheaper is long gone. The days of trying to have more cost-oriented decision making is long gone. Today, the receivables data points is not only seen by the shared services leader or the AR leader or the GBS leader or just the CFO. It's seen across the enterprise. Therefore, data and insights becomes very key. There was this book that I was reading across, and it was talking about one key component. The difficult part of knowledge is not just stating a fact, but representing that fact in a useful way. Now, the reason I'm saying this is similarly, it applies across to insights. It's not a question about providing insights, but also giving them insights about how that can be used for business, actionable business decisions. So when you have domain, when you have process, when you have strong foundation in a process, backed up by strong domain policies, and then operating on a strong platform, the opportunity is limitless, right? Let me take an example. More recently, there was this large manufacturing consumer goods company that we were actually looking at solving their deductions problem. Deductions by itself is $1 billion problem, not easily resolved. And over that period of time when we were looking at things, the first approach seemed to be, let's try to improve process. Let's try to bring in all our best practices. Let's see who else is doing what. How can I tap into that? It worked. It worked to an extent. It moved the needle a little bit. The second thing we said is that you still have to be spending so much of manual effort trying to get that out. And my insights, my data points, my intelligence is still lacking. Then came in the platform. So you identified a platform that was able to actually take away the complete menial, repetitive, redundant tasks, but also give you a visualization in terms of near real time of saying where, what's going wrong, when, and how. That moved the needle a little bit more in terms of optimizing their deductions process. But then came the question of saying, am I really running the right promotions? Am I really running the right engagements and campaigns across the globe, across markets, which is relevant to the markets? That was the question that popped up. Came in policies. How can I actually optimize the kind of policies that I'm looking at? What kind of measurements would I have for the campaigns that I'm driving across? This is not about being deterrent to the sales force. It is about working together with them in order to make them successful as well. So those components came into play, and then the third P came into application. And the kind of value that it unlocked, the kind of insights that it drew across the sales force and the business was worth its weight in gold, Kim, because you were able to actually tell the marketing team, for example, saying that this campaign will be successful or not, up to a 60 to 70% confidence level. And that goes a long way in terms of driving value. And that's where the future of accounts receivables is, where you're actually driving insights, you're giving facts, you're giving representation that actually enables businesses to take right decisions.
It's actually like transcending, the DSO, some of those key measures that we've been so reliant on over the years, right? Isn't it like taking it to a whole nother level to give the kind of insights? It's far beyond really those things that, yes, maybe still key and good indicators, but obviously the use of these three things would take you to a new level. Something that comes to my mind, when you were talking about sales and some of those things and the impact, like I hear, let's just say from a sales organization, we really need that data point. We really need that, let's just say, me being especially in the area of deductions, we really need that at the point of that transaction. Can you enter this? It'll give us all these insights. Or it could be something that's being driven from more of a policy side or an audit side of the business saying, hey, we really need this. There's one question I maybe want to, or maybe one comment that I want you to be able to comment on, and that's just the concept of this cost of compliance, right? Is that all of these things, while it might be, some perceived in the business saying, or in the organization saying, yeah, we really need this would be terrific. There's another component to add. Okay, great. Yes, we can do this, but there is a cost associated, and is it worth it? Is it something that we really want to do? I mean, I don't know if something like that fits into, like when you're talking about policy or these other areas, but it seems like it kind of coincides to what you're talking about.
Absolutely. So maybe I'll take two comments that you took across. So I'll address the first one, which is about questioning the norms of traditional metrics. And I love that fact about how we actually evolve as a receivables management function. And it is also one key component of partnership that we have with HighRadius, where Genpact often questions saying that, why do I need to always keep myself restricted across to the traditional mode? Why don't I think beyond DSO? Why don't I think beyond past due? Why don't I think about something else? We'll come to that later, but that's absolutely happening. Kim, you're so right in terms of saying, should we be measuring differently? The second component of saying cost to compliance. It's interesting what insights can actually throw, which might be quite an aha moment or something that you already knew all the time. So one of our leading companies that we work with constantly, we were looking at experience as a key component, right? And we were talking about, not about cost, not about transactional components, not about past due. We were talking about experience. How are your customers looking at experience? Do they love working with you? Is it easy to do business with you? As part of that component, one of the insights that we gathered across through the experience frameworks that we brought in was the fact that there was literally a huge amount of cost being spent on solving for minuscule dispute amounts, which the clients did not themselves care too much about, right? It was a process, a tick in the box, and they had to do it. But the fact was that you were spending literally thousands of dollars for a $350 invoice dispute amount, which was a revelation by itself. The second component was any step that you're doing across, be it campaigns, be it sales-related initiatives, be it your credit policies, be it your overall delivery policies, etc. All of this is with the sense of saying what matters to the client and how you can keep them happy, how the customers could be happy so that they do more business with you. And when cost to compliance comes into that play as well, wherein you're talking about whether something is relevant and whether the cost associated with that is relevant too. And believe it or not, the receivables management function is quite right smack in the middle of things in order to give you that kind of insight of saying that this might be the right path to take forward, or probably cut that thread out and not pursue it any more further because it just doesn't make sense. So I've seen huge examples of where that might actually come across. Goes back to that storyline of saying accounts receivables is right in not just you're misusing it if you're just looking at it as saying past due percentage and DSOs and how you're actually doing cash applications. The kind of insights that drives from that particular component encompasses compliance, encompasses supply chain, encompasses contractual management, encompasses even master data to a large extent, all of which are integral components of any enterprise.
So, Kim, if I may add to a few things Sajeesh said. So it is interesting, right? A lot of clients of Genpact are also clients of HighRadius, right? And clients especially love that we are coming together to drive more value to the client. And there's quite a few examples of that one. But in the specific example that Sajeesh mentioned, as a process, it makes no sense for the client to go after small dollar deductions because the cost to compliance is probably very huge. This is where you leverage the platform or technology to figure out what deductions have a higher probability of being invalid and focus your time and energy on those. And let technology using artificial intelligence, machine learning, whatsoever, figure out the remaining and automate the remaining. So you're optimizing the process so you get the maximum benefit from people associated with this function, but have a policy in place that says, hey, I'm going to do this, but every quarter or every month, I'm going to randomly pick like 20 deductions or 30 deductions or 100 deductions that were auto-managed by the technology and see if it's doing the right thing. Make sense? So the combination of the process that we put in place and the leveraging the platform and the policy will probably drive a lot more productivity gains for the client. Does that make sense?
Yeah, it sure does. You know, and do you have something to add, Sajeesh?
No, I was trying to give you an example of where we actually went together, and we are pushing the limits together. We are evolving. We are learning together about what actually matters. One of the key things is how can a fact be used very well? How can you actually provide insights? And one of the things that we are pursuing together is how can I actually give an insight across to the CFO office saying that an invoice, as it is issued or even before it is issued, I can tell with a lot more confidence through AI interventions and through my experience of having worked with that customer for a long time, if that is going to be disputed or not, or if it is going to be paid on time or not. That is 30, 60 days well before in advance that you're actually giving that level of confidence level. That's important. That's the future of finance. That's the future of receivables management too, where you're actually predicting and thereby having an action proactive rather than waiting for something to happen and then reactively spending another 20 days trying to collect on something.
And so, yeah, that's a terrific point. You know, when you're speaking of the customer experience, like how long do you normally see it takes for clients to realize some benefit or see a difference?
Interestingly, if you had asked me this question around 18 months back, I would have said that it took a lot more convincing in terms of saying that data and insights were important from an AR standpoint. But what the whole world has gone through over the past 18 months, close to 18 months, has been quite a revelation in terms of how the thinking has also evolved from an enterprise standpoint. Digital transformation today does not take 12 months. Value and ROI does not need to be a 3-month, 4-month, or a 1 year kind of a request. Things are happening in weeks. Digital transformation is happening in weeks. Changes to processes are happening in weeks. And these are fast moving. There are no more silos. Silos are being broken. It's not just a finance, I'm supply chain, I'm master data kind of a component. Those silos are broken. And all of that is driven by the experience of what enterprises have gone through when something completely unexpected hit the ground. Today, you could look at an accounts receivables function and you could talk about having processes put across in place in weeks, right? You could have platforms being deployed across in 8 to 10 weeks. You could have your policies being changed across because there is a whole lot of mandate coming tops down in terms of ROI, of what I should change, why I should change. In fact, Salesforces are coming across and saying that, what am I doing wrong across in terms of how we go to the clients, right? So those kind of components are happening faster. If all three of them happen sequentially, there is no need to wait for years together to start seeing ROI. Enterprises who have actually taken the journey were a bit more pragmatic in terms of when the pandemic hit are already seeing value in terms of how organizations are coming. And value does not necessarily have to be in terms of just purely quantitative measures like revenue, like cash, like cost. It is also about how well you interacted and engaged with your client base during the pandemic because they were going through a mess themselves. And that actually drives across into how much margin share you're going across. How much of market share did you capture during a period of time, but just being the right partner for your customers too. So it's a whole larger than just cash or cost coming across as value drivers. And the ROI to your question, Kim, does not need to take years.
And that, the other benefit, some of the other benefits, I guess, outside, makes me think of like employee experience. I don't know, Vikram, if you have anything to comment related to something around that and how the kit has changed or impacted that relationship.
Yeah, so we're actually very proud of ourselves for getting the next for retooling the employees of the next future, right? For the future. Because if you think about it, the digital revolution and evolution will not stop. We are retooling your existing team members so they can adapt much more quickly to changes. They can adapt much more quickly to new technology, embed it into their own lives and be a lot more productive and add value, right? So that evolution of employees, I know change management is not easy, right? People have been doing certain things as a certain way for a long time, and any change, even personal change, is difficult, right? It's about how we motivate them for this change. But I can tell you that once people have adapted to this, there's no turning back. They love it. They continue to evolve and grow into it. It's just like your cell phones. Every 2 years, you have a new cell phone with a new feature, and you adapt. It's very similar to that. I think the future of employees and team members and analysts and collectors and disputes analysts would be heavily driven by what technology can do for them, and they're making those mission critical, deduction critical decisions, which is where we see the future of the workforce to go. Is that what you're looking at?
Yeah, you mentioned retooling employees. So can you give maybe an example of what that might mean or look like?
So take a simple example of Cash Application Cloud, right? One of the tools that we deploy. 1 week after go live, the number of invoices or payments that an analyst has to touch drops from 100 a day to 10 a day. But one of the things that they're also doing is spot checking and making sure that things are going in the right way. They become an agent of the tool, giving feedback back to the tool so that it can continuously progress. They become a what I call as you're retooling them to be monitoring and continuous feedback loop people so that the efficiency can continue to grow, right? That's a good example of how from doing the work to training a machine or a system how to do the work, that's the retooling that we are taking employees through.
So is that like an example of like a touchless AR? Maybe is there other examples that you might consider? If someone would say, well, what does touchless AR mean? Would that be an example, and do you have any others like it?
Yeah, the concept of touchless AR is... Go ahead, Sajeesh.
No, go.
Okay, so the concept of touchless AR is... so it is one of the things that our CEO has been talking about, the concept called the perfect invoice, right? Or something that nobody has to even worry about. So an invoice, from its birth to its death, no human is putting a finger on that invoice, right? Which is what a touchless AR means. Which means that to invoice, your invoice is 100% accurate. It is paid on time or plus or minus certain days. It is not disputed. It is applied correctly and cleared away, right? So that's the whole concept of a touchless AR. Now, Sajeesh, I think I want to request you to talk a little bit more about this slide, because there's a lot of variables that goes into your perfect invoice.
Absolutely. And perfect invoice is came just so you know, it's something that me and Vikram have been working together as our teams together, trying to develop. And it goes back to your primary question saying, is DSO my primary metric? I honestly believe it is not. And the reason that we said is, all right, if you believe DSO is not the benchmark of anything to do with accounts receivables, then what is? And that's where the question comes across in terms of how we were thinking of straight through accounts receivables, straight through AR. And Chandler, if you could stay with slide number 9. So I'd like to talk through that. The question is, first and foremost, if you're thinking about what should be the right metrics, why should that be the right metrics is the question. Before all of that, we decided what exactly are we aspiring towards? And for us, the aspiration was having that perfect invoice. From its birth all the way to closure through payments, no touch points, right? And for that, you just cannot do it with one particular variable alone. You need to actually have multiple components coming in, which is the whole PPP storyline that we're bringing in. But before all that comes across, what matters to an enterprise is what we had to understand. So is customer experience the most important thing? Is revenue and optimization the most important thing? Cash flow a critical component? Is cost of the function a critical component? And for most of the enterprises, it is most of these and more to a large extent. But let's assume that the business, committed business outcomes that we're chasing across our lines, customer experience and cost, right? Let's keep that as the objective coming across. You start looking at what exactly is the measurement that I want to look at. When I look at the best accounts receivables function in many enterprises that you look at, they have this ideal balance of efficiency and effectiveness. What that means is that not only are they doing this work in a cost-efficient manner and delivering value, but they're also providing cash flow impacts and being self-sustainant in that sense of what value they drive back to the company. For you to do that, there is a need to have the technology interventions. For example, for touchless cash applications, quite transactional in nature, and you should not be having any person sitting there and plugging it into specific boxes, right? So that was about having integrations with the banks, machine learning, looking at having your remittance advices matched across to your invoice details, if required also to any sort of claims and deductions and closing that out, and then just applying it. A cash applicator does not just apply cash. You might also need to do reporting, credit notes, debit notes, all of which could be automated to a larger extent. Therefore, the accounts receivables analyst can then focus on the more logical reasoning and analytical capabilities of solving disputes, having conversations with client accounts on customer portfolios. So those kind of components come. That's where HighRadius, with all its bells and whistles, lovely AI-enabled modules that they have, comes to the forefront. Now, does that serve the purpose? Not really. If you're actually chasing after a perfect invoice index, and that's what the metric we call PI Square. Now, why do I call it square? It's perfect invoice both on the efficiency side as well as effectiveness side. Pi Square is a combination of literally, it's an index of 6 metrics. 3 that actually tell you whether you're efficient and cost effective, and 3 that actually tell you whether you're driving value back to the enterprise. Now, all of this comes together. You also need an operating model that can sustain it. You also need experience frameworks and best practices, industry specifications, regional specifications that come into play. That's where the whole domain frameworks Genpact brings into the table. How exactly does customers behave? Why do they behave so in a consumer goods retail industry, in a heavy manufacturing industry, in a banking industry, in an insurance industry, so on, and in a life sciences industry? So those kind of insights, which are quite tough to get over a period of 20, 25 years of running delivery operational lines, you get that sense. You build that across into a HighRadius platform, and then you have the best of both worlds. And you have Pi as that one measurement that actually tells you whether you're effective and efficient and actually driving committed business outcomes.
Sajeesh, if I may add one more thing, right? It is very important that you could have a very fancy tool, very sophisticated tool, but if it's not in the right hands, it's as good as a dead logwood, right? So that's exactly why the process, policy, and platform and the domain expertise that our partner Genpact bring to the table makes it very interesting proposition for enterprises. This is Pi Square is a very interesting metric because it is not just looking at transactional data, it's also looking at the people, the time they're spending, and the whole efficiency aspect of it. So we're really excited about Pi Square and how this can be the measure for the GBS heads to see how efficient their AR processes are.
So would you say that the 3 of those things are equally important? And a second quick follow-up to that is, where do you start? You know, is there a place that you would typically, if you went into a client, you would first look at, or do you do a kind of an assessment, initial assessment, and then basically, you know, like if all of them obviously needed help, where would you start? I guess maybe.
Sure. Yeah. I can take the first cut, and Sajeesh, maybe you'll have to chime in a lot. So please. All the 6 key elements are relevant. Obviously, for certain industries where they're not dispute heavy, maybe not. That could be, you can define the weightage of these 6, but for a typical industry like a CPG, a food distribution, manufacturing, where you have all aspects of AR functions, deductions, credit, collections, billing, you would want to weight them equally. Our default is equal weightage for all the 6 parameters. So there are 2 ways to solve it. You want very good DSO, add more people, do a ton of collection calls, and get your DSO down. Well, you want efficiency, don't worry about DSO, just get at least a lean team and get your bare minimum done. Your DSO might not be as good. So you have to have a balance to get best of both worlds, right? And that's exactly why I'm recommending an equal weightage of all the 6 parameters. Now, Sajeesh, your inputs on this will be greatly appreciated.
Absolutely.
To answer this, yeah. So the second part of your question, Kim, the best way to go about it is we can take 3 months of your AR data and come back with a proposition before we go into a deep dive assessments with you all. So that way, once we get some high-level data points, like give us your open AR open and closed, and Genpact and HighRadius can sit back, do some analysis, and come back and present what we think your Pi Square is and where we think we can take you to, like a future roadmap. But to get there, we may have to do a more current process studies, which will take some time. Go ahead, Sajeesh.
Thank you. And just adding on to what Vikram said, more often than not, when you introduce something new, the first question that I almost always get asked is, what's the baseline? Whom do I look at in order to be the best Pi Square metric? And my response always remains that, why are you looking outside? To Vikram's point, simulate it. Simulate your AR data. Give the 3 months, 6 months, 12 months kind of a component. Simulate it to understand where you are today in the Pi measure. And after that, relevant to your industry, relevant to your business objectives. Because for some industries or some enterprises, cash might not be the immediate challenge at this point of time. Cost might be. For some other industries, cash is all important. Cost is okay to have. And the beauty of this particular measurement is, therefore, the weightage can be applied according to the changing business dynamics and objectives that you would have. Therefore, you're constantly being aware of where the enterprise wants to be, and you're aligning your AR value outcomes to that particular initiatives and the strategies that they have. So it is critical to understand that you have a measurement that is also dynamic in nature, just like there are tools and tech that is being plugged across into it.
So I want to just take a quick pause and just really encourage those that are participating. If you have any questions, we're going to try to make certain that we have some time at the end. So we're closing in on that time. So please make sure that you're posting your questions, and we'll do our best to get to them or do some follow-up afterwards. So yeah, I think that's great. Vikram, is there anything more that you want to add on that topic? Did you cover those slides the way that you were hoping to kind of share the information about the kit?
Yeah, the kit is for any company, any industry, any size company. It's like one of those one size fits all. The output of it is what is very customized to each of your businesses, right? So if you're in a CPG industry, we would also benchmark you with other CPG companies to see where you are in terms of your 6 metrics, right? With whatever information, HighRadius is a leading provider, with a market leader in this space. We have a ton of CPG clients, so we could benchmark you with peers. Of course, not disclosing any confidential information. We could disclose your Pi Square score and your 6 metric scores with all kinds of information, and give you short-term and long-term plans to get to the most optimized process, leveraging existing technology you have or leveraging outside technology like HighRadius as a combination. So I would recommend every organization to leverage this opportunity and leverage this toolkit to look at their accounts receivable as an entire department and see what the PPP kit can bring to the table.
Terrific, thank you. I want to go back a little bit and talk about or ask Sajeesh about policies. If you were to look at the top 5, like maybe recommendations that you might have related to policies, what would they be?
It actually might be the first and the only one that matters, to be honest with you, Kim, is look at your global credit policy. And when I say look at your global credit policy, it's about how broad it is today or how detailed it can be tomorrow. Right? So I've seen credit policies being generated as directional. Of course, it needs to be directional. Any policy needs to be directional. But so directional that it can be misinterpreted and taken into account by themselves across markets, across, when it comes to payment terms, even when it comes across to what is the ceiling limit for write-offs, et cetera, there is such a broad range of components that you don't even consider in a very global credit policy. So global credit policy is one of the key components that I will always look at. The second component is more adjusted across and linked to those components is based upon the insights that you derive out of your accounts receivables function. You might want to think about how your supply chain policy is looking at. You don't need to make drastic changes, but you would be getting actionable insights that you can actually improve upon. You can look at your master data components. You can look at your contract management policies. You can look at your campaign management policies for some of those industries that actually matters across. So it is actually a start point and then an evolution, as you might call it, Kim. But I would definitely start with your global credit policy. Start understanding what needs to be in it and what need not. And whatever things are in it, to what level of detailing should it be? What are the exceptions to the rule? What are the compliance components that need to become out? Once you have a very strong global credit policy, to a larger extent, you're actually feeding in information across to a very good tech, good process saying this is how things need to work. And then it becomes seamless after that.
Awesome. Thank you. I'm going to take up one question that I would like you both to comment on, if you would. What is the indicative directional business outcomes that an enterprise can achieve through an optimum PPP kit for their AR function?
I'll go first.
Yeah. After you.
No problem. So in most cases, when we talk to our clients, when we do our PP kit analysis and assessment, we typically build a business case for them to show them what the savings opportunities are and the optimization opportunities are. Most of us, and I'm going to divide this into two buckets. Things that we can control. When I say we, is the client, Genpact and HighRadius can control, and things that we cannot control, right? Which is your client's customers. So within the things we can control, we have seen anywhere from 30 to 50% optimization in efficiency, and then about 20 to 30%, maybe more, on the effectiveness. Think about DSO, days deductions outstanding, net recovery rate improvements, credit decisions, all of those things. Now, so it's a combination of these things that we cannot control. The beauty about it is, since a lot of customers, we can give you an insights about how many of your existing customers are paying via ACH to somebody else and check with you, so we can be very specific and targeted, and that varies from industry to industry to client. But Sajeesh.
And you're so right on that. There are controllable factors, there are uncontrollable factors, but more often than not in these cases, the ask from most of our client base is sort out the controllable factors, right? So that it does not become an issue at all. It should be a non-issue, really. But for those that are uncontrollable, give me data, give me insights. That's good enough, right, in terms of how I can actually take actions. But going back to the question came of how much value can this open up? Before we jump into how much it can open up, let me talk about how much of an issue exists in the organization or in the market or in the world. Every US dollar, 1 billion of sales, there is an opportunity to improve working capital by 100 billion. For every 20 billion of sales that happens, there is 5% of it, which is around 1 billion, of disputes are unresolved and written off across industries, across companies that do business. Over 2.5 trillion of working capital improvements opportunity exists for 1,500, only 1,500 US and European companies. And if you look at it globally, only 50 to 60% of customers always pay on time. And only 20% of time are spent on decisions. 80% is spent on gathering data. So keep this as a mind, and let's take a company that we just make up. Say that it is a $10 billion consumer goods company. I can assure you, based upon all the engagements that we work together on, you're looking at a literally 500 to 600 million conservative cash flow impact coming across for this $10 billion company, which I would assume is in the median range of performance. Not way down in the leagues, but not way up in the best in class as well. you would have 500 to 600 million in cash flow impact. You would have literally around 60 to 70 million odd in direct EBIT impact, P&L impact through revenue optimization initiatives. And you can look at 50 to close to 45 to 50% of cost efficiencies coming out. Now that is tangible enough.
Oh, that's definitely a lot of big numbers. And I think the timing is right. Most of the CFOs are also thinking about how to manage the working capital. Cash flow is a big thing for them, and we're seeing an uptick in interest from all these large companies to do an assessment study, like the PPE kits, for example, and give back proposals of what we can do for their business, right, Sajeesh?
Absolutely. Show me somebody who commits to outcomes. That's the partner that I want to work with. And the big story here is a compliant process, a consistent process that actually drives committed outcomes.
That's the HighRadius and Genpact story, right?
Absolutely.
So I want to maybe, this may be our last question, and that is what piece of advice would you give to companies looking to revamp their AR organizations?
I think I'll keep it short to 2 sentences. Find the right partner that will help you assess your current process without being biased, who understands your industry, somebody who can bring best practices in front of you, and go through that assessment process. A company like Genpact, for example, they've done this so many times. They can give you a unbiased opinion on how your future state should look like and what you need to do to get there.
Over and above what Vikram added, the one thing that I would, if somebody's thinking about rebranding and reimagining their accounts receivable process, take one statement, completely ignore one statement, which you will consistently hear a lot, which is saying, oh no, this is how it always happens here. Take that out of the equation. It doesn't have to be. Quite a lot of enterprises have undertaken the journey and then realized that it does not have to be so. Up until you actually are honest to yourself of saying that there is much more value in accounts receivables that you can actually deliver to your organization, that's the first step. After that, everything is semantics.
Kim, I do have a question for you.
Uh-oh.
So no, see, the thing is, you have run an AR department for multiple years, right? Obviously, you're doing something else, you're helping other organizations. But let's say when you were managing the department at Hormel, and Sajeesh and Vikram came to you and said, "Hey, here is a PPE kit." What would your initial reaction be?
Well, I think probably it sounds good, but how would we measure it, I think would be one of the things that I would be curious about initially, and understanding the different aspects. So like I really perked up when you guys were sharing about that measurement piece and those 6 components and the pie square, is it? Thank you.
Yes.
And because it's more of a totally different way in thinking of efficiency and effectiveness, and and how we go about measuring it. But I mean, I'm always one to be curious and want to know more. So, and I think my natural reaction might be, again, sounds good. Tell me more. Where have you seen this done? Give me some experience. That kind of thing, I think, would be an initial, thought about, what it is. But maybe, we only have just a couple minutes So I want, is there anything more as far as the measurement piece that you want to touch on, or, because that might be something that like, ooh, I never even thought about that. We're so used to some of our traditional measures and that's something that really you can take back to an organization, right? And see something very tangible that they might be able to use and continue to use to monitor and adjust and get some real insights from. So I don't know if there's anything left, related to that you want to mention or comment on. That might be a good place to close.
Sure, Kim. Just one thing I'll leave with the audience and yourself is that this is not a either or in terms of measurement. It doesn't have to be. We're always resistant to change. Let's continue measuring the measurements that we have. Nothing stops us from doing that. But start looking at measurement too. And then as it progresses, you would see the value in terms of saying that whether this is the way I want to go across as such. So think of it as in your next AR review with the CFO office, you have one page that has a pi square index and tells you whether you're doing well or not.
Got it. Awesome. All right, so we have to close there. So thank you all for joining. We really appreciate it. And thank you, Sajeesh, Vikram. It's been just a pleasure spending this last hour and talking about this great topic. So thank you.